This is the Just Alpha Weekly Market Recap for Friday, November 28, 2025. This past week has seen a strong uptick across the major equity indices, with the S&P 500 rising 3.7%, the Nasdaq 100 outperforming with a 4.95% gain, the Dow Jones increasing by 3.16%, and the Russell 2000 leading the pack with a notable 5.58% jump. Meanwhile, the U.S. dollar index fell 0.72%, reflecting a softer dollar environment, while the 10-year Treasury yield dipped slightly, down 4.5 basis points. In commodities, oil prices edged lower by 0.67%, but gold saw a robust increase of 3.67%, signaling a flight to safety amid market volatility. The strong performance in equities can largely be attributed to a combination of positive sentiment following the best Thanksgiving week performance since 2008 and broader market dynamics that suggest a favorable backdrop for December. The advance-to-decline ratio across all stocks was encouraging, coming in at 1.69, with 60.1% of stocks above their 200-day moving averages. Notably, mega-cap stocks saw even greater strength with an advance-to-decline ratio of 4.44, highlighting the dominance of larger firms as they continue to attract capital. Digging deeper into market mechanics, the flow of funds played a crucial role this week. Dealers were positioned gamma long, which typically suggests that they would need to buy stocks as the market rallied to hedge their delta exposure. This dynamic provided support for the upward movement in stock prices. In the options market, we observed significant activity around key strikes, particularly as puts were unwound, which alleviated some of the downward pressure that could have materialized during market pullbacks. The thin liquidity environment only exacerbated this effect as market makers adjusted their hedges, creating a positive feedback loop that reinforced the bullish sentiment. The microstructure of the market revealed that as dealers unwound short gamma hedges, they were forced to buy into the rising market, which further amplified gains. Resting buy programs around key moving averages helped stabilize the market, especially after the strong performance leading into the holiday week. This interplay between dealer positioning and systematic flows from trend-following strategies continued to support the bullish trend we've seen in the indices. However, while the large-cap stocks thrived, the breadth of participation was mixed. The small-cap stocks struggled with an advance-to-decline ratio of just 0.96, and sectors such as consumer cyclical and financial services demonstrated weakness with advance-to-decline ratios of 1.11 and 0.75, respectively. This divergence raises questions about the sustainability of the rally as we head into December. The mixed participation suggests that while large-cap stocks may be leading the charge, we should be cautious about the underlying health of the market as a whole. In terms of macro influences, the bullish sentiment in equities coincided with a generally dovish outlook from the Federal Reserve, which has been cautious about further tightening. This has allowed for a favorable environment for stocks, particularly in sectors sensitive to interest rate movements like utilities and real estate, which also showed positive advance-to-decline ratios, although real estate faced a significant decline in breadth week over week. The overall inflation narrative continues to weigh on market sentiment, as investors remain alert to any shifts that could signal a change in Fed policy or economic conditions. Turning to the cross-asset landscape, the decline in the U.S. dollar index reflects a risk-on sentiment, which typically benefits equities and commodities like gold. The rise in gold prices indicates that despite the equity rally, there's still a strong demand for safe haven assets, suggesting that investors are hedging against potential volatility or unexpected macroeconomic shifts. Oil's slight decrease may be indicative of a pause in demand expectations or a response to geopolitical factors, but it hasn't significantly impacted broader market sentiment this week. As we look forward to the coming week, the key question remains: will the present breadth of market leadership confirm itself? Or will we see a fading of momentum, particularly among the small-cap and mid-cap sectors? With December historically being a strong month for equities, the interplay between strong large-cap performance and weaker breadth could define the trajectory of the market heading into the new year. Investors will be keenly watching how earnings reports and economic data unfold, as they will likely influence both